All right, folks, this is Marco Palmero, and in this video, I want to have a conversation around practical steps that you can take to build your deal flow pipeline. If you're looking to find a company to buy and you want to do that from scratch, so if you're an entrepreneur that wants to acquire a business, you might be a search fund, or you might also be somebody who already has a company and wants to acquire a new one, but it's the first time that you're getting into it. So, how do you create momentum quickly? How do you do things and you set up things so that you can be successful without reinventing the wheel and you ultimately get the results that you need within a reasonable time frame? Well, the first thing that you need to understand, at least from my perspective, sourcing deals across geographies, is that the process of originating deals will take time because we cannot really tell whether or not somebody is going to be interested in selling the business unless we go out into the market and start asking that type of question to people. And even when we start asking that question, there still might be not a lot of people that want to exit their business. I mean, on average, between 10 and 20% of all businesses in all industries are going to be up for sale. This is just industry data, but it might be higher or it might be lower depending on which part of the cycle you're in and which part of the cycle the industry that you're targeting is currently in. And so the first, I would say, piece of advice, if you want to call it this way, would be uh, understand that the process of sourcing deals is going to be a long-term plan for you. And yes, you could get good deals in a few weeks, but don't be disappointed if that doesn't happen overnight. Now, what are some of the practical tips, tools, and kind of like lessons that I've learned in sourcing deals that I can provide you so that you can avoid mistakes and kind of like start building your deal flow pipeline on your own? I think this can potentially be helpful for people that don't want to get outside support from companies like us, and they just want to source deals on their own. So first, I would recommend getting clarity on what are the type of companies that you want to buy. Basic questions like the industries that you want to target, size of the company, years in business, employee count, estimated revenue, profitability or non-profitability, depending on the type of asset that you're looking to buy, and many other factors like this that of course will be greatly dependent on the industry that you want to buy a business into. That's the first step. If you don't have clarity on the target, then everything that comes later will not matter because you're just going to be shooting in the dark and you're basically going to get a bunch of responses that are really going to give you any feedback, any tangible feedback on what the market is operating at this present moment. And so we want to get clarity on the data first because the input that we make into the system will determine a lot of the outputs that we get. And so first is the data, kind of clarity on the targeting. Even if it's narrow, it's better to maybe start a little bit narrow and then open up the scope instead of just shooting for 50,000 different companies that are in a variety of different verticals and then achieve very little and have data that is not actually giving you good information to ultimately make decisions on whether or not industries are good to pursue or maybe you should pivot to something else. So this is before you even start sourcing deals. So understanding what you want is mandatory. Most of the searches that we do on behalf of clients or when we help clients one-on-one in building their search is are all kind of like structured with this initial piece that is kind of like the foundation of it all, getting clarity on what we are shooting for. After that, it becomes a question of tools, systems, strategies that you can deploy to originate deals on your own. Now, assuming you're going to be doing this on your own or maybe with a small team because, again, you want to source deals for the first time, I would recommend you create a system that brings you opportunities, but it doesn't require you to be around all the time. Because if you have a small team or if you're sourcing deals on your own, the time that you put into sourcing deals is going to be probably the most precious commodities that you have. and you would like to avoid allocating a lot of time in sourcing the deals, and most likely you would want to allocate it towards negotiating the good ones and closing potentially one of them. So how do you separate between these two things and kind of like build a system that gives you the deals, but at the same time have free time to negotiate and structure the ones that are actually good? Well, it comes down to building up a pipeline that brings you opportunities from multiple places, and these channels that generate deals for you should be almost 100% automated. So if you're planning to start with cold calls, that might be a great idea because cold calls are a good way to source deals, but they're going to require a lot of your time. And so if you are juggling between multiple tasks, they might not actually be ideal. On the flip side, you might create systems to automatically reach out to brokers, automatically reach out to business owners via email, SMS, LinkedIn, whatever, and then integrate all these channels together so that they can bring you constant inflows of opportunities from multiple places without you necessarily being there watching the process all the time. And so if you build up a cold outreach campaign via email, a cold text campaign, a cold LinkedIn message campaign, or a campaign that targets brokers, then you can have that campaign run on its own, set it up maybe 1 week, and then have it run for 3 or 4 weeks, collect the results, check what the outcome is, and then adjust, revise, maybe completely delete if that is not producing the type of lead that you would like. But then again, you're going to have spare time that you can allocate towards cultivating the opportunities. So my personal recommendation, and what we do generally with most clients that start with us or work with us to build their own proprietary channels of origination, is setting up a few channels that can be almost 100% of the time automated. So email would be something that I target. LinkedIn, with the right tool, I would target as well, provided it is a good fit for your industry. Text campaigns, I would target that as well. Or WhatsApp, if you're in a geography or in a market where WhatsApp is used more than text. And lastly, brokers or intermediaries, but that is not proprietary. DealFlow is more like listed opportunities. These 4 channels should start to generate flow for you. And if you do everything correctly from a outreach perspective, they should also generate a pretty strong flow. If you don't get results out of these 4, chances are something is not right with how you set up the process or how you're messaging people. And the objective there would really be to create your messaging around, I would say, not only the industry that you're addressing, but also the medium that you're using to send that message. Because the way you approach a person through a cold email is going to be significantly different compared to a LinkedIn message, simply because a cold email, there's limited information that people can access. On LinkedIn, they can click on your profile, see what you're all about. And so there's a different approach and a different strategy that goes into reaching out to people in different channels. And you can tailor that process accordingly so that you can get results from all of them. And the beauty of this is that if you set up at least a few channels that run in parallel, you're going to get different types of leads, and you're going to connect with people that maybe wouldn't not reply to a direct outreach via email, but then they replied through a LinkedIn message, and vice versa. And that is simply because different people are more comfortable doing different things. And so we cannot predict where a business owner is going to reply to us and where he's going to be more comfortable in replying to us. Therefore, we want to pinpoint his location and kind of like find the channel that is more comfortable for him and then use that to build the relationship. Most people I see that approach deal generation and sourcing opportunities incorrectly is basically the fact that they try to double down on a single channel, which might be good if the channel is already working for them. But if they want to scale or they want to create compounding results over time, the only way to really achieve that outcome is through multi-channel outreach, because you're going to get people that you would have gotten through the first medium simply because they're more comfortable in interacting on another channel. And that is important for you to understand. So from a strategic perspective, multiple channels are going to be the way. From a tool perspective, for all these channels, I'm not going to cover tools. We have our preference, but there are tons of tools that can help you automate cold email, set it up correctly. LinkedIn, automate the connection request. Then I would send personalized messages to every person, since you have a lot of info on their profile generally. Text, same thing. Brokers, there are systems to automate emails to brokers so that you can get that deal flow as well. So from a tool perspective, I wouldn't overcomplicate things. Just try to keep everything as simple as possible, because as you start getting flow and opportunities are coming through your door, keeping track of everything is going to become increasingly challenging. And so if you complicate things in the very beginning, then it becomes a nightmare later, and you're going to end up spending most of your time juggling between the tasks that you need to take care of to keep deal flow running, instead of talking with the owners that are actually interested in selling and that would be good opportunities for you to close. So that is the emphasis that I would put on the system. Simplicity, few tools, few channels, nail them down, messaging, and then send it out and start cultivating these opportunities. Then there's an important aspect, which is, I think I will record a separate video on this, which is the trade-off between quality of the opportunity of the call that you get and the quantity of it. Sometimes I see people that want to have the best of both worlds, meaning they come to me and say, Marco, I want to source deals. Can you source deals for me? And I say, yes. And then they say, well, how do we define quality of a prospect? And I say, well, that will be something that we need to identify together, define your search criteria, and that will define a qualified prospect. But then they say, well, how many opportunities can I expect? Well, that is a question that nobody can answer, really. As I mentioned in the beginning of the video, we don't know, the industries, how they're going to respond to that, how many business owners are going to be interested in selling at any given time. And even though we put out the best possible effort to get all of them into the pipeline, still the outcomes might be very different from one another. And that's why time is really a key factor in determining the success of a campaign, because over time, even the ones that might be not ready to sell now are going to make a decision, and with the right follow-up system are going to connect back with us. And so 30, 60 days later, we're going to get more leads that, are going to become part of our ecosystem because we did the right input in the very beginning. So those are some considerations that you should keep in mind. I guess from that perspective, I want to get back to the point about quality, quantity, and kind of like break it down a little bit more. If you want to get highly qualified prospects from your proprietary outreach, you can certainly get them. You're going to have to filter them more or less depending on the industry and how you craft your message. But the point is, you can qualify people as much as you like, provided you expect less opportunities to come at the end of the funnel. So, for example, you get 100 people that are interested in selling their business, and you decide you want to take calls with all of them. Chances are 70 of them are going to schedule more or less, and maybe 50 of them are going to show up. Now, out of these 50, you don't know how many are going to be qualified. You will need to understand that over a call. If you filter them instead, out of these 100, maybe only 20 are going to schedule, and 15 are going to show up. So as you can see, there is a discrepancy between the amount of calls that you get, but that is a byproduct of the filtering mechanism that you put in place. And so provided you're okay with this trade-off, so low amounts of calls, more quality, and more time, ostensibly, to get them, compared to higher call volume in a shorter period of time, then you're going to be in a good place, and you can accept the outcome of your system based on kind of like the filters that you set in motion. Some people don't accept that, and they want both volume, quality, speed all at the same time, and that is kind of hard to accomplish for different set of reasons. First, if you qualify people after you reach out to them, certainly a lot less are gonna move through the second step. That's just the reality of it. In addition, depending on how tight your qualifying system is, they might take longer to actually get back to you. So if you have a questionnaire that they need to fill out, for example, that is very tight, they might not have time to fill it out right away. So they might take 1 week or 10 days to complete it. As a consequence, it might take you, 10, 14 days to schedule a call. While instead, if you don't have the questionnaire and you book them right away as they come in and say, I'm interested, you reduce that time to 0. And of course, you might take a few calls that are redundant or not relevant, but still, you're going to have a higher call volume. So those are all considerations that I would want you to keep in mind, because sometimes people get disappointed when they see certain types of outcomes, but they don't understand that the kind of system that they put in place is actually conducive to that type of results. And so it is important for you to understand what you're getting yourself into. If you build up tight filters, expect less calls, hopefully decent quality. If you have less filters, expect more calls, and you're going to need to do a little bit of screening on the call itself. And I guess those are some of the considerations that you should keep in mind. Most of them are more on the strategic side. I guess if we need to cover one aspect that probably a lot of people don't consider when starting to identify businesses for sale, is that most of them underestimate the amount of volume that is required in order to generate a certain type of result. So I talked with so many people that said, well, we're sending out 200 messages or outreach pieces of content across platforms every week, and we wonder why we're not getting any response. And the answer is evident: you're not doing enough. But most of them feel that quality should be a priority compared to quantity. And that is the case. That is certainly the case. But it should be coupled with a decent enough volume to give you the data that you need to understand whether or not what you're doing is working. And that is not going to be something that you get out of 200 outreaches every single week. You're going to need to do 10 times that, even more. And so this is just a numbers game. And people who don't understand this generally end up in trouble, wasting a lot of time, because they feel that the mistake they're making is in the technical setup, while instead just cranking up the volume might have solved all their issues. And so keep in mind that you need to accommodate for a certain amount of volume for email, outreach messages, even conversations with brokers. That's just the reality of it. And the sooner you accept it, the better it's going to be. And even out of all the deals that you get at the bottom of the funnel that might be qualified, might be good opportunities for you, still some of them, as a matter of fact, the vast majority of them are not going to move forward. And so this is a funnel that is very, I would say, it's like ruthless in nature, because you get tons of opportunities on top, filter them down ruthlessly, and you end up with just a few that are worth closing. And so the moment you accept that, you are positioned to kind of get this process going in the right timeline and ultimately get the outcomes that you need. At the end of the day, what most people don't realize is that you don't need so many opportunities at the bottom of the funnel for you to make it all worth it. Because, for example, if you're targeting a purchase that is a $2 million company, generating $2 million company, let's say they make $2 million in revenue, 500,000 in EBITDA. If you have to reach out to 10,000 businesses to find one of these, and then you end up buying it, so be it. I mean, you might say, well, that's shitty conversion for the amount of companies that we reached out to. Who cares? I mean, you found a business that is generating 500,000 in EBITDA out of these 10,000 and you bought it, let's say you bought it for 4 times EBITDA, you bought it for 2 million, that's remarkable, right? And why would you care about anything else, right? I think the problem with a lot of folks that start looking at deals is that they approach it too much as a sales funnel, thinking they need to have a lot of sales into the pipeline in order to make it all worthwhile. In reality, if you're targeting 2 deals a year or whatever, you just need 2 excellent opportunities that are going to close. And yeah, you might need 40 NDAs, 20 LOIs, whatever, to get to that point. But provided you do all the steps that I just mentioned to you correctly, and you accept the fact that it's going to take a reasonable amount of time, a reasonable amount of output, then you're going to get what you need at the bottom of it. And you just need a few good deals to make it all worth it. That's just the perspective that I got. I mean, we had a case where somebody was just sending out 50 emails or 50 phone calls a week, very low volume, and he was desperate because he felt he was not finding the good opportunities. The moment he signed up with us, we just cranked up the volume and fixed a few things in the funnel that weren't working, and he got in 1 week 1 opportunities, $10 million in revenue, 2 million in EBITDA, looking to sell in the next 60 days. Now they are down there, they're flying down. I talked with a client a few days ago, and they're about to close on an LOI. So that was an excellent opportunity that we got through volume and through a few strategic changes, but most importantly through understanding that the funnel itself was very ruthless in nature. It was reaching out to a lot of companies. Just a few of them are going to be interested, and then out of these few, just a bunch are going to be good deals that we can actually close. And we ultimately got the one that was actually the good fit for the client. So again, things that you should avoid to completely mess up the system. One, not have clarity on the type of business that you want to target. Then not having a multi-channel system in place that reaches out to people and kind of like runs on autopilot so that you can allocate your time toward negotiating the deals. Then not understanding that you need a decent amount of time, a decent volume in order to generate the outcomes that you need. And then understanding that markets might change. You might be in a moment where a lot of people are selling in that industry, or in a cycle where a lot of people are not selling. So understanding all these things is important as you dig into things. Tools and all these technical things, I mean, they're just partially relevant. And if you're interested in knowing more about that, we've got plenty of stuff to help you. Programs where we show you how to build a system on your own, or when we actually go ahead and execute the search on behalf of people. So they come to us, they say, we want to find business X, Y, and Z, and we source the deals for them. If any of those are of interest to you, check the links below, and you can then find out more about how we can work together. Instead, if you want to execute on your own, take what I just shared with you, implement it, and then go ahead and start building your own pipeline.